Thank you. Thank you very much. First and foremost, let me thank Mr. Amir, a very close and dear brother of mine, who took the initiative and the effort to organize this. So thank you, Amir. Thank you, Mr. Atiq. Thank you, Mrs. Musarrat, for coordinating, and many
Hello.
thanks to Ms. Suzanne, for the welcoming remarks. Uh, I have, in fact, a very good association with, with Kuwait. uh, this was a place where I first started my career long back in 2003. And so I have quite a good memories of my career when it started in this part of the world. Yesterday, when I was, working on the slides, my daughter, who is in ninth grade, she just passed by the screen and she, saw my screen, and then she said that, "What are you working on?" So I said, "Look, I'm working on a presentation to be delivered in a school." So she looked at the slides and she said, "But the slides look very boring. Okay, they are not to be presented to the children. They look more official." So I said, "Okay, can you help me?" So she was the one who sat till maybe a little bit late in the night and tried to make it more children friendly. So I'm not sure whether the look and feel of the slides are more children friendly, because so this is the one she worked in terms of the background colors and adding some things. So let me just quickly start with the right Islamic finance. Now let's go to the core of finance, right? Now, why we need finance? So if we try to ask this question, and who needs finance? And what are the type of needs of finance? There could be just mainly two scenarios in finance. One is you would need finance to maybe fulfill an activity. And the other is you have excess of funds and you would like to save that fund or secure that funds or invest that fund. So these are just two main needs which anybody can have. Now, when we say anybody, who are all these, people or the customer base for finance? So first and foremost, it will be individual. So in banking parlance, what we call retail banking, some people call it consumer banking, meaning to say people like you and me who are individuals working, okay, and who are individuals either in industry or they are self-employed, who want to have their financial needs met, be it in the way of opening an account and placing their funds, or be it to fulfill their needs. So if you need a car, you need a credit card, you need to buy a house, you need to take an educational loan, or you need any other financial need you have, so you need finance. So that would be an individual. The other would be a corporation, meaning to say a company, an institution. So maybe an institution, a school like yours, has financial needs. It has to pay to the staff. It has to pay to the rents. If it is a rented building, it has to pay on other salaries and so on and so forth. That's a corporation. So corporation could be again multifaceted, based on industries and format, service, manufacturing, multiple forms of corporate. So that they also need finance. And again, they also have two needs: to save their or to channelize their liquidity, and also to fulfill their needs. And the third is government. Governments also need finance. They need big ticket finance, and they have their requirements. And we at City work very closely with many sovereign governments. We have also advised some time back to the sovereign of Kuwait. We have, as we are speaking, we are closing a deal with sovereign of Indonesia. We are working closely with Dubai sovereign, with Bahrain sovereign. Multiple sovereigns uh, need finance, and also they also need investment. So even, for example, in Kuwait, there's a huge sovereign fund where there's a liquidity of the government which they want to save. One of the biggest sovereign funds in the region is of Abu Dhabi. You have Bahrain sovereign fund. You have Malaysia sovereign fund. So these are funds or the liquidity which the government wants to invest. So in a nutshell, these are the three customer bases, and these are the two main needs. I mean to say, saving need and spending need. Now let's go to the other slide, right? When we talk about Islamic finance, what precisely we are talking is that Islamic finance, like many other Abrahamic religions, have a very clear cut definition of how commercial contract needs to be done between individuals. and the core of Islamic law. So when we say what is the main objective of Islamic law, right? The objective of the Islamic law is to, protect the morality and religion of an individual, the life of a person, the family of an individual, the intellect of a person, and the wealth of the person. So meaning to say, this is the core of the Islamic law, and the principles of this law are mainly surrounding on how these things could be protected. And from a religious point of view, in Islam, there are very clear guidelines how, as your learned student was reciting the Quran, which talked about the verses on riba, right? Riba, if you translate it, it becomes interest. And there's one more definition to that in the common law, which they use.
Sir Imad?
Yeah.
I'm so sorry to interrupt you, but I feel your slide is not shown to see. We cannot see, it's not visible. Can you please check?
Is it now visible? No.
No, you're not sharing, sir. Just.
Oh, okay. 1 second.
It is visible now, sir.
Oh, sorry.
Thank you.
So it was not visible even earlier when I was speaking?
No, it was not.
Okay. Sorry.
But you were clear. We understood.
Yeah. So I was just talking about these three needs, right? And then when I talked about individual, corporation, and government, and then I'm talking about the core theme of Islamic law, meaning to say, to protect the morality, life, family, intellect, and wealth. Now let's come to Islamic banking, right? There are three main aspects of Islamic banking. One is in terms of prohibition of interest. And what is interest is? Interest is basically, to give you a simple example, if you give a person $100 and if you tell him that, look, I'm giving you $100 and I will be charging you $5 as interest, and you please pay this 100 plus $5 at the end of 1 month. So this is in simple parlance interest, meaning to say you have a principal amount, you have agreed interest amount, and sometimes, or in many transactions, there's also a clause that if you are not in a position to pay that amount at the agreed time frame, that interest would be compounding or increasing. So Islamic law very strongly prohibits interest. So the verses which were read earlier in the meeting were very specifically talking about this interest, meaning to say that when you enter into a commercial transaction, your transaction should not be having the concept of interest. Now, the question is that if you do not have interest, then how is it possible, and how an Islamic bank would work, and how would an Islamic bank would get profit? So we'll come to that in a bit later. But one point needs to be understood very clearly, that interest as a concept is prohibited strictly from a Sharia perspective, and Islamic banks are quite keen to see to it that there is no element or there is no concept of interest in any transaction which they do. And as a philosophy, I will not go much deeper into this, but just I will try to highlight that interest as a principle has also been prohibited in some of the major religions, be it Christianity or be it even Judaism. And there are also some verses of interest available in some of the Hindu texts in terms of Upanishads. But in terms of later practices and others, the practice on the ground by the church or by the Judaism or by other schools of thought from a religious perspective have not been taken it to the ground, meaning to say in the commercial transactions. As a moral principle, as we come, most of us from India, so I'm not sure whether you might have read about Munshi Premchand, right, where he wrote some of his very prominent plays surrounding on interest, right, looking interest from a concept of a social evil. From the literature perspective, if you read Shylock, right, the character of Shylock, Shakespeare has also used interest as an evil moral concept from the society perspective. So this is the concept, how from a moral, from the writers and also religious perspective, this has been looked at as not a permissible a concept which needs to be put into the transactions. The other is impermissible investments, meaning to say that any Islamic bank, the liquidity which they have, they will not fund to any company or any institution, number one, who is involved in conventional finance, meaning to say, if a conventional bank goes to Islamic bank and says we need funds, the Islamic bank cannot give them, because as I said, the conventional bank activity would be based on interest. The other is the Islamic investments are very strongly prohibit investment or funding any activity which involves production of arms and armaments, meaning to say, if there's a company which produces ammunition and other things, so Islamic banks do not fund any such activity where the liquidity is used for the purpose of production of any arms and armaments, because the logic and the rationale is that ultimately these would be used against humans, and it will be a loss of life, and that is not what Islamic finance would support. The third is about gambling. So any organization or any company or any group of people who want financing from Islamic bank or Islamic funds will not be funded for these activities. And the companies which are involved in alcohol or tobacco, they are also not given any funding from any Islamic institution or fund. So meaning to say, these are the sectors in which Islamic banking does not provide any funding to any of these activities. The third is an element of speculation. What it means is that this is a more technical term, meaning to say, to simplify an aspect, meaning to say Islamic finance does not allow you to enter into any transaction which is highly speculative. Speculative is a risk which is more closer to deception, meaning to say, if a person wants to sell something, but he does not want to reveal all the features of the product or service to other person, so there is an element of risk. So that kind of transactions, when the Islamic contracts are reviewed, they are seen to it that there needs to be clarity in the contract, and there should not be any ambiguity. So this is an aspect of interest. Now, let me just quickly go here and explain to you. So you may say that, fine, so these are the features, but how does the Islamic bank function, or how does it go about it? Now, let me explain to you what Islam, there was again a verse which was read in the beginning, which says, meaning to say that we are allowing you trade, but we prohibited the riba, meaning to say the interest. So when we say we are allowing you trade and prohibit riba, what does it mean? So to give you a simple example, for example, you need a car, right? The value of, or the price of the car might be 10,000 KD, right? And you go to a conventional bank. The conventional bank would say, fine, you are eligible for this financing, take this 10,000 KD, and maybe after 5 years, you pay us 11,000 KD. The 1,000 KD would be the interest amount, and this is the financing. But an Islamic bank cannot give that. I mean to say, it cannot take that route. So what the Islamic bank does is that the Islamic bank goes and purchases a car with its own money. It takes the ownership risk of the car. Then it adds a profit to the car. So it buys a car, for example, for 10,000 BD, adds a profit of 1,000 more, 11,000 it becomes, and then it sells it to the customer at 11,000 BD, which needs to be paid on an installment basis. So you may say, what is the difference? So the main two differences are the Islamic bank goes and purchases the car. So it becomes a kind of a trader or a businessman. It takes the ownership of risk. It takes the possession of the car, and then it transfers the car to you as a purchaser. So that becomes, I mean to say, a permissible transaction. So if you need a house, for example, the housing is a long-term financing. So it's, for example, 25 years old financing. So if you go to a conventional bank, again, the conventional bank will give you a loan of, again, if you take the same example of 10,000 BD and charge you 1,000 BD for 25 years as interest. But an Islamic bank, what it does is that it buys the house, it takes the ownership of the house, and then it leases the house to you for 25 years with a monthly installment to you. But the ownership risk of the house stays with the bank. If anything happens to the house, it is the risk of the bank which it takes. And at the end, when you pay all the rentals, then it will transfer the ownership to you on a gift or through a sale transaction. Now, let us go in how the conventional bank works and how an Islamic bank works. So as I was giving you the example. So here we have a conventional bank. A person comes and deposits the interest amount. I mean to say the deposit amount, and the bank pays interest on the liquidity which the bank takes. And on the loan side, again, as I said, the bank gives you the loan, you buy the house, and then you pay the interest. On the same side, how a Islamic bank works, as I was saying, if it's a housing transaction, it will buy the house and lease it to you. And if it's another kind of transaction, it will buy it and sell it to you by adding a profit. So these are two main differences. So if the objective of today's meeting, if you take away this as a main takeaway, that an Islamic bank, the two main things which it does is, number one, there is no concept of interest in their commercial transactions. Number two, the Islamic bank does not invest in any impermissible activities. So neither it invests nor it gives funding to any such organization which is involved in these activities, which I have explained to you. And the third is the Islamic bank, how it does is that either it buys and sells or it buys and leases. So if these three concepts are something, if you could digest and take away from today's discussion, I think that would be more than enough at this point in time. I'll quickly explain to you what, in terms of statistics, how the statistics are with regards to the number of institutions globally Islamic banking has. Currently, Islamic banking is spread in more than 100 countries, but the bulk of the spread we see in the GCC, right? So especially in Saudi, in Kuwait, in UAE, in Qatar, we see a bulk of the Islamic banks. And we also see in Southeast Asia, in Malaysia and Indonesia. In terms of the total assets, currently we are somewhere between 2 to 2.5 trillion dollars. This is an assets of the overall Islamic banking industry. In terms of the key banks, as I said, there are a lot of international banks, including Citibank, in the region who have Islamic finance services. So here you can see Deutsche Bank is there, HSBC is there, Mellon Bank, Bank of New York, Bank of America, Standard Chartered, and most of these banks offer Islamic banking services in the region. Then, as you see, these are the major banks in the UAE, in Saudi Arabia, in Qatar. In terms of structure, the bank could be like a full-fledged subsidiary as City Islamic Investment Bank is. It could be a window model, meaning to say a conventional bank having a window in their infrastructure who does Islamic banking and finance. These are some of the banks in Kuwait, as Mr. Atiq was mentioning about Kuwait Finance House. This is one of the market leaders in the region, quite well spread out across the jurisdiction. They have a very decent balance sheet and they have been performing quite well across the years. We actively work with Kuwait Finance House, both in Bahrain and also in Kuwait. And these are the other entities. In Turkey, we have seen coming up quite strongly on the Islamic banking and finance. We support Turkey and we have quite a deep relationship with the sovereign and also with the multiple institutions in Turkey. So Turkey is another geography we are seeing Islamic banking growing. I'll just quickly give you just an update because most of us are from India. So just some may have a question that what is happening in India with a population of almost 200 million Muslims? Is there any Islamic banking activity happening there? So there have been some experiments in the past in terms of how the Reserve Bank had set up a committee. First, the Anand Sinha committee in 2005, then Raghuram Rajan committee was set up in 2008 when he was deputy governor. And then when he was a governor of RBI, then there was again activity started. But as of 2017, the RBI, Reserve Bank, has decided not to pursue, how they categorize it. Islamic banking as interest-free banking. So currently in India, from a regulatory perspective, the RBI does not recognize Islamic banking and there is no such license. But there are a few Islamic funds. There are some venture funds, which the SEBI, which is again a regulatory body in India, has given their permission. And then the index in BSE, the Bombay Stock Exchange, they have an index, which is Sharia compliant index, where investors can go and select the companies which are compliant and invest in them. So this is as of a quick snapshot of what is happening in India and what has happened in the past with regards to Islamic banking and finance. Because most of you are young, and I'm sure this question may come to your mind, that a lot of you might be reading about cryptocurrencies, and so many currencies, whether it be Bitcoins or other forms of currencies are coming. What is the view of Islamic banking? From a Sharia perspective, there are three views, as I've highlighted here. One says it is totally prohibited, right? The other says it is permitted, okay? And the third says that it is permitted based on what is the nature of investment you want to do using cryptocurrencies. These are three positions. There are certain guidelines which have been issued by some of the Islamic bodies with regards to what could be the activities of cryptocurrencies. But as you know, most of the regulators still have not recognized cryptocurrencies as valid regulated currencies. So still it's a bit of a gray area. But as a permission, there are certain Sharia scholars who have allowed it to be invested and to be transacted based on the activity behind the currencies. This is just a quick slide, just to tell you in terms of, as we all know, in terms of the distribution of the wealth at a global level, right? I'm sure most of you might have read in your schools or outside that the wealth which the global world has and its distribution to the people at large is quite, lopsided. To give you an example, if this is an Indian map, right? And if we are talking about, so in terms of the geography, like almost half of India, right, till this place, so owns only 1% of the total wealth of India, right? And the 9%, for example, owns this much area. This is just to give you an impression of how the, unjust distribution of wealth is there in across the world and also across India. Meaning to say only a small number of people are holding a huge volume of wealth, right? And if you see this red portion, right, is the 50% owned. So meaning to say that a bulk of the wealth of India is just owned by 1% of rich people. And some people say that this might be or also the reason because of an interest-based economy model, where from a contractual perspective, the financier would always have an upper hand irrespective of the performance of the activity or the investment. And that's the reason why wealth becomes concentrated in one place for a very long time, and it has a very unjust distribution pattern. So this is just to give you not to give you a negative feeling, but just to give you an overall feeling that how at a global level the wealth and at an India level the wealth is distributed. So I'll stop here, and I would like to give time to you to ask questions.
Thank you so much, sir, for your valuable insights. We'll really look up for more such sessions in the future. Students, we're now open for question and answer sessions. You can post your queries, questions on the chat box, and sir would address the same. Students can post their queries or questions in the chat box.
We have a question from Farhad Hazrat, sir.
Yes.
As you said, this generation wants to know more about cryptocurrency. They would like you to talk more about it. Cryptocurrency.
Right. Okay. So let me just touch on cryptocurrencies, right? So as you know, the cryptocurrencies are a kind of digital currency which work with a certain technology in the back end, right? And initially when it started, the idea was for people to see to it that how can they independently create currencies and use it to transact. And that's the reason why initially when it was started, nobody took it seriously, especially the regulators. So they thought that this would be something which would start, but after some time it would not take the steam and it would end. But unlike their thought process, it was totally unprecedented growth which happened, and it was totally out of control and now the regulators and the banks, including Citibank, is thinking that we should offer this service to investors wherein we can become the custodian of cryptocurrencies for clients. I have been speaking to some of the other international banks like DBS in Singapore, which also has like one of the first digital bank in India, and they have also started this service where they facilitate their customers or their investors to invest actively on the cryptocurrencies. So to answer your question, cryptocurrencies I would say in terms of financial world, it would be a kind of unprecedented miracle, or nobody expected that this small activity which was started could take such an uptake from people and transaction and volume. And I see more seriousness coming from the regulators would come, and it would become a quite active industry going forward. And you as students should, I think, should keep an eye on it, read about it, think about more innovative ways. Just maybe after this call, just do some Googling about Dogecoin, right? How from a simple concept it started, and it is now almost $85 billion net worth company in just 4 years. And how it started from a small concept, a fun concept of a meme of a dog, became a currency of $85 billion net worth company. So to answer your question, it's an upcoming industry. And earlier people were not taking it seriously, but now both financial institutions and regulators are taking it seriously. And for you, a point would be, please do your read up, and please actively see that what from your end, how you can engage and read more about it and be part of this growth.
A very important question by Sakina. She's wondering, if you don't pay interest, then how are the depositors rewarded when you invest in Islamic banks?
You see, when we don't pay interest, how they are rewarded is that, for example, if I am a bank, right? So if I take $100 each from 10 people, so it'll become $1,000. So what I do from that $1,000 is that I, on the asset side, so bank has two sides, a liability side and an asset side. So on the liability side, I take the funds. On the asset side, I give financing. So what will happen, my funds, which I deposit in an Islamic bank, the bank will use that fund, as I said, to buy a car and sell a car, to buy a house, sell a house, to give a credit card, to give a personal finance. So from that side of the business, they generate profit. And that profit is what they share with you as a benchmark profit to you as an investor.
We have a question from Mika Prince. He's asking, is there any independent central body that regulates Sharia scholars globally in order to maintain a good degree of consistency within the Islamic banking industry? Also, is there a governing accounting standards or framework used for reporting of Islamic finance products in the financial statements?
Yeah, there is a body which was set up by some of the GCC member countries, which is called as IOFI, AAOIOFI. and this body is basically comes up with Sharia standards and accounting standards. This body is established in Bahrain, and they have quite a detailed Sharia and accounting standards. And by regulation, the institutions in Bahrain have to follow those guidelines. By regulation, the institutions in UAE have to follow these guidelines. And they are an industry bodies, regulatory body setting, and they govern both these aspects, the Sharia and also the accounting standards.
Any more questions, students, please? Post it in the chat box.
Puneet is asking a question again on cryptocurrency. He's saying at the age of 16 to 18, is it wise for us to, it's a good decision to invest in this at this age?
Yeah, you see, just my son, he saved money on his buying and selling of pets, and he wants to invest. He has opened an account. He's 15 years old, and he has been pestering me that can he invest some money, and he wanted to open an account. He opened it, and then I said, okay, fine, invest some and see the result. So to answer your question, Puneet, yes, why not? Get some small allocation, open an account. Okay, of course, at your age, you can direct it to your father and get some funds and invest and see it. There's no harm.
Sir Burhanuddin wants to ask, like, what is the role of investing in shares in terms of Sharia finance? Are we permitted, or there are some restrictions? How is it?
There are some restrictions. There are two kinds of restrictions. One is what we call as the sectoral screening, meaning to say, as I said, those 5 segments. So if there's an alcohol company, there is a company which is involved in gambling, there is a conventional bank, right? In these kind of companies, you cannot invest. Then there is a financial screening, meaning to say if the company has too much of a loan, or if it has too much of liabilities and no assets, in those you cannot invest. But globally, most of the international exchanges, be it Dow Jones, New York Stock Exchange, London Exchange, Hong Kong Exchange, Singapore Exchange, Malaysia Exchange, Kuwait Exchange, all of them have Sharia compliant index and indices where you can go and see which are the companies which are fulfilling the screens, and you can actively invest.
There's another question by Ryan. Is it better to deposit money in an Islamic bank or a conventional bank?
Ryan, you see, as I said, this is more of a moral principle from an Islamic point of view. But I have been, close. I have studied in Malaysia. I've been visiting Malaysia quite a lot. So in Malaysia as well, a lot of Chinese, they interact and open accounts with Islamic bank. So it is, if you look at it from an Sharia perspective, yes, but even if you look at it from commercial perspective, if the bank is giving you good returns and you're happy with it, so why not? And if you want to have a comfort that your funds will always be invested in industries which are not harmful to people at large, then from a moral point of view also you can take the decision.
All right, next question. Is Islamic banking a good start in the UK?
Islamic banking, honestly, when I was with HSBC, we worked quite hard to launch the Islamic banking products and services. To give you an answer, the regulator was very helpful. They had allowed 5 Islamic banks, but honestly, Islamic banking was not a very success story in UK, even though the regulator supported it very heavily. There are 5 licensed institutions on the banking side, but on the sukuk side, there's a huge amount of listings, or almost most of the sukuks are listed in the UK exchanges. And on the fund side, a lot of Islamic funds are also domiciled in UK and around UK in tax-free havens. So on hardcore banking products, it did not work out because the conventional market was very competitive. But on other side, capital market, sukuk, which is the kind of a bond structures, on that segment it worked. But the regulator, to answer you, was very, very friendly. And the regulator, the government of UK had also launched a sukuk 4 years back of around 200 million euros.
One more question, sir, from Mika Prince. Where should I keep my money? Islamic banking doesn't adequately address the inflation problem, and you say interest banking is forbidden. If today's $1 is going to be worth 90 cents next year because of inflation, why can't I charge interest to compensate for the loss?
You see that whole idea about inflation, and because of inflation, is it justifiable to take interest, right? That argument was not approved by the scholars, okay, from a Sharia point of view. So the answer from, again, Sharia point of view is that just keep some money which you want to have for your immediate need. And the other money you can always actively invest, right? Instead of just keeping money as in money, you can invest in many different forms, as somebody was saying, shares, or somebody was saying other forms of investment. So from a Sharia principle, it is said that don't just sit on liquid cash or money, invest your liquidity and try to gain a return out of that liquidity. But to answer your question, inflation was not a justifiable argument to charge interest.
Thank you, sir. One more question from Karuna. Where to find Islamic bank's profit and loss sharing rate?
The profit and loss sharing rate is by most of the banks put onto their on their front floors, okay, the expected rates by the regulator, and then also on their websites, some of the banks publish it.
Okay.
I'm just really sorry for this, but I have to urgently jump in another call. I didn't expect this to go on a little bit further, but I really thank Amir. I really thank everybody, Madam Musarrat, Madam Susan, and Brother Atiq for coordinating, and all these students. Please, I'm more than happy to answer your further questions either through another call sometime later or through an email. I'm more than welcome. We have created a website. You can go to YouTube and type Marifa Academy. So we try to make some engaging videos. It's a free website, learning website. You just go and watch some engaging videos, and please reach out to me in case you need anything, any kind of support. I'm more than happy, and I'll be to support in any form which I can. But I'm really sorry. I need to just quickly exit because I didn't realize that this would we would because some technical hiccups. This took some time, but I'm very happy, and thank you to everybody. And inshallah, I'll be in touch.